Well, why work with a financial planner?
And this is a conversation that we have constantly internally, and we thought that this would be good for us to unpack some of the things that
Welcome to the Live Greater View, a financial planning podcast produced by VLP Financial Advisors that discusses life, money, and perspective. We help clients live their best life at every stage through our VLP Live Greater partnership process. Thank you for tuning in. All right, great topic we have today, Chris. One that a lot of times when we're having those initial meetings, this is, or a client saying, hey, I want to refer you to someone, this really comes up. And that is, why work with a financial planner and what to look for.
Yeah, and the first thing that, when we're in our chairs and somebody comes in and they say, well, I've seen all these things about advisors or planners, is you realize from the consumer's perspective, it's such a wide net. Those terms can represent so many different things. It's clear to see how somebody could get confused. A quick Google search, you have all these different things thrown at you. So I hope some of the things that we talk about today will actually help unpack some of the questions that we've gotten over the years. And I really think our agenda today covers a lot of the commonalities that we've seen.
Yeah, and that's a great point. So let's start with, really the term advisor. That's something you see everywhere. Commercials, even the CFPs run various commercials about what a CFP is versus, but advisor could be anything.
Anything. Yeah. And it really, if you think about the term advisor, it's okay, here is the individual, but then obviously each individual can be doing something different in some situations. So if you work with a firm like ours, obviously we're a large enterprise, we have systems and processes, and a lot of that stuff is streamlined. But if you go to, let's say, a wirehouse, and you're working with somebody at one of the big banks, even though they have the same branding on the door, in reality, each one of those advisors is doing something different. One advisor could be primarily using funds or exchange traded funds like we do. One advisor could be using single name stocks or primarily annuities. Another advisor could be doing a mix of both. There is no system, but they're all termed or identified as an advisor.
Right. And even someone who's selling insurance and annuities can fall into this category. Mm-hmm. So it's really good to understand what it is that you're trying to accomplish, what you're looking for, and make sure that aligns with the person that you choose to do your planning with.
Sure. And nationally, the term advisor, there's 300,000 financial advisors, so quite a number. 100,000 of those, 300,000 advisors are certified financial planners or CFPs. We think that's a good, place to start. Is hey, this is the bigger, broader group, and then that 100,000. That tends to be, in our opinion, the gold standard of advisors that are out there.
Yeah, absolutely, because they have the credentials for financial planning. Yep. They've done the education, they've passed the exams, and they have the continuing education, which is really key when you're looking for someone who you want to align with to do this planning aspect.
And the commonality there is, advisor moving on to planner is you really, in most cases, in our opinion, want to work with somebody who is not transactional, but somebody who actually has the training, has the framework for planning. When you go from somebody that's selling insurance or selling investments, you take that next step to that's part of the equation, but it's obviously not everything. And there's other pieces that we'll unpack.
Yeah, absolutely. We'll touch a little bit later what to look for in the financial planner. Now let's switch to the actual financial plan, right? A lot of times when clients come in, we're starting with the retirement planning. Maybe they're 10, 15 years out. They are saying, hey, we're getting closer to this. We're not even sure if we're ready. But that's where we're usually, the first component of the financial planning is really kind of looking at that retirement planning picture.
Right. They're on the verge of big changes in their life, their personal situation. They, typically type A people. They've done well for themselves over time, and they're in that phase where really their job is just to accumulate assets. Yep. Save. The market will fluctuate. They know that over time their assets will continue to compound. If the market goes down, that's okay. They're still saving, often case in their 401k and other investments. They'll just buy at better prices, and then, that'll correct itself over time. Now they're on the verge of moving into retirement. There's that aspect of, well, I actually need to turn this on its head, live off of these assets. Then there's those other, pieces like Social Security, Medicare, required minimum distribution planning, all of those other moving parts that all of a sudden go from the back burner and way for far out in the future. All of a sudden they're on the front burner.
Which wasn't in your finance class in high school.
Exactly.
Yeah. Yep. So we got the retirement planning. That's usually one of the main triggers. That's most of the time you're going to see when financial planning really comes to the forefront. Other times it could just be, hey, I'm young. We've got these assets we need to figure out. But so retirement planning, that leads us to look at the investments, right? Yep. Hey, what do you have? What have you invested in? What assets are at your disposal? And hey, are these going to line up, or do they make sense?
Right. So the retirement plan, or just your overall plan, that's the outcome that we're working towards, and then the investments. Those are the vehicles that are going to get us there. So those two things need to be on the same page, and we first need to know where we're going before we start picking an investment.
Figure out if
choose
that's right.
what's gonna get us there. And I would say on the investments too, those things change over time.
Absolutely.
So there is no one answer that, hey, here is X fund or X allocation or whatever that I know I can just put my money in and let it go.
Yep.
That may work for a period of time, but just like we talked about a couple of minutes ago, how products change, how the times change, that's something that needs consistent reevaluation, often case management.
Yeah. So we talked about the retirement planning. Usually it was one of the triggers to the planning to actually starting the whole process, investment management, and then comes the tax planning, right? And the big one, I think, with tax planning, it's not, tax planning is not January 15th when you start getting your documents through April, April 15th. It is, hey, how do I do things smartly to make sure I'm making estimated payments if I have to, or am I withholding correctly? And it can be a moving target.
Oh yeah. And all of these things, they're interconnected.
Yeah.
So when you go in and you sell something from your investment account, you take a withdrawal from another account, you choose some sort of stock option election at work. All of those things work together. We emphasize the term planning. It should be planning, not tax preparation.
Right.
Two completely different things.
Yeah.
So it's a 12-month process.
Tax
not
preparation
a
is filling
process.
out the documents or having the CPA fill out the documents, and the planning is making sure the money you paid in the system is going to align with what the preparation is going to tell you.
And just as we talked about with investments, how investments change over time, obviously laws change over time.
Absolutely.
And if you just have your head in the sand and say, hey, here's how I've always done things, and you don't actually monitor what's going on or where you're taking income from or things like that, that could really have a bad effect on your family and future generations, particularly if laws change around distributions.
And that's a great point. So tax planning isn't just the year that you're in. It's also, hey, the things that you're doing now, how do they translate 5 years from now, when you're retired, when you're collecting Social Security, when you have to take requirement distributions, and even something that's going to be, tax planning is going to be at the forefront, depending on, we'll see how things go, but there's some pretty big tax laws getting ready to sunset at the end of 2025.
Yeah, and I would say, those changes obviously warrant monitoring. And I would say also that there isn't a tax strategy or approach that's a silver bullet that applies to everybody.
No.
One that comes to mind is Roth conversions. If you Google Roth conversions, 9 times out of 10, the article that you read is saying, oh, it's the best thing in the world and it makes sense and all that stuff, which in some cases it does. We're very, prudent, and we do a lot of Roth conversions. In some cases, it does not.
Maybe not when you're in a 39% bracket.
Right.
Yeah.
And you're in, certain income situations. and it's one of those things where, just like investments, taxes are something that obviously changes over time and may or may not apply in certain situations, certain strategies.
So let's talk about another component, which is estate planning. And this is a big one because there is a lot of misconception on how you should do estate planning, and a will covers everything. And a lot of times we're talking to clients like, okay, yeah, the will's great, but you have these accounts that would still have to go through probate, doesn't avoid, some cases trusts work well, but even just a simple designation of beneficiaries. So estate planning is it's very fluent. It's always changing because people die, things change, you get divorced. I don't know how many times we've seen someone pass away in our 401k plan and their ex-wife was still or ex-husband, still the beneficiary. So these are things you want to revisit because you might have filled that form out 15 years ago. Right. And your personal situation's changed. Right.
And it's one of those things that nobody likes to talk about it, but it's something that's very necessary.
Yep.
And by you actually being responsible, taking care of all of those things, you're not only obviously helping yourself, you're really helping your future generations by just making sure that when you do pass away, things are buttoned up and they're not as much of a headache, and money goes to where it needs to go. And I would also say, like we talked about with investments and tax planning, you can't paint a broad brush with estate planning. So if you go to kind of like we talked about on a planner, from a planner's perspective, if you go to a planner, they immediately recommend you an investment without even learning about you. If you go to an estate attorney, they're immediately recommending trusts or all of these fancy things, with letters behind them. that's something where, again, you say, hey, I need to really revisit some of this stuff. Does it match up with what I'm trying to accomplish? And in some cases, trust in that example apply, and in a lot of cases, they don't.
Yeah. And how many times have you heard, I don't care, I'll be dead?
Yeah.
So that's usually not an estate planning strategy that we recommend. So lastly, I think really one of the big components on the financial planning side we didn't touch on yet is insurance. So a lot of times with estate planning, insurance can come in, but it's not just, hey, making sure there's funds to pay any estate tax if there is, because let's be fair, the estate tax is pretty high right now. Again, subject to sunset. But also it's life insurance. If you have children, you have a mortgage, how does those things get paid? Whether, do you have enough assets to cover that? Or is your spouse protected? Is your family protected? How about your auto insurance, your home, all these pieces? Because insurance is, I always use the adage that insurance is the one thing you may pay and never actually see any benefit from. Because if you do, you've had something happen. You had an accident. Maybe you came disabled. You need long-term care services. But again, they're almost a necessary evil. My personal situation myself, my husband became disabled for a period of time, and thankfully we had disability insurance, because otherwise it would have drastically changed our personal situation.
And again, it's one of those things that needs to be revisited over time. And just like there's no broad brush to paint with the other things, there isn't with insurance either. I would say also from our perspective, it does not make sense in most cases to mix insurance and investments. In some cases, depending on the client scenario, that may or may not make sense, and we'll visit some of those avenues. But if you're speaking to somebody and they say, hey, I have the best product for you, it's going to earn a guaranteed 7%, there's no risk involved, it's facilitated by this insurance company, that's just a situation where we'd say, hey, you might want to do a little bit more work there.
Yeah, and understand what you're giving up, right? Because usually you're giving up there's some levels and pieces of the portfolio or expenses that you need to be aware of.
Yeah, which is tough because that exploits part of the fear that goes into it.
Absolutely.
So just worth mentioning.
Yeah. So you brought up a good thing. So now we've talked about the whole components of the financial plan. Well, why work with a financial planner?
And this is a conversation that we have constantly internally, and we thought that this would be good for us to unpack some of the things that are on our minds and some of the commonalities that we've seen over the years. And the first one where people say, hey, why would I work with a planner? Sometimes you think of the technical things like, hey, it's identifying the investments or the planning like we just walked through. That's a major component of it. The other big component of it is delegation.
Yep.
We work with a lot of smart people. Typically, they're high earners, really driven. They don't have time to really spend all day on their own investments and planning, and that's why they hire us. I would say that is the biggest commonality, that, the thread that ties this all together.
Yeah, I usually use the analogy of getting your oil changed, where exactly, you go to get your car, your car needs its oil changed, unless you have an electric car. So I guess I'll have to change that one. But if you don't get your oil changed, you're going to have issues. The car's going to break down, the engine's going to seize. But when you pull in, you drop it off, you want your oil changed. You don't go in and say, hey, what oil are you putting in there? What filter?
Yep.
Some people do. Yep. We call those collaborators.
Yep.
But for the most part, there's some do-it-yourselfers. People like to do their own oil. But for the most part, people just want someone to take care of that. They came to someone who's that specialist to change the oil, make sure the car is running right, and then go on their way. And I think that's, when you look at that delegation, that's kind of where we fit in, right? They are smart. They know they need help. They don't have the time and interest to learn those things or do it themselves. Yep. And that's where we make a good fit. And part of it also, if we look from the other aspects, a lot of times, we look at we're the quarterback, right? Yep. We're not doing, we do some tax planning, but we're not preparing taxes. Yep. We review estate planning. We're not preparing estate documents, but we are quarterbacking with those professionals. Hey, we noticed in the conversation this came up, let's take a look at the estate planning. Does this still make sense? Are we changing, do we need to change some of the scenarios? You're charitable, do we need to make some changes there? Those things come up.
Yep, and that role as quarterback for the future for delegators, that's something where you get somebody who's really smart, they do really well at their job, they've hired us to delegate, and then they just say, hey, you know what, I've thought about this, whether it's retirement planning, changes to their plans at work, whatever, and they just need essentially a confidant to bounce those things off of, make sure that they're heading down the right path, ask the tough questions, things that they may or may not have already thought of. And that's something where we just add value through the X's and O's of what we do, but also through the conversations that we have.
Yeah, absolutely. I think that's really important. I think the other big thing to touch on is the emotional aspect in the investments. We see this a lot. You pick an investment, and sometimes we pick investments by, there's certain stocks in AI right now that people are probably thinking they missed and buying, but then maybe the market goes down and they sell it,
yep.
right? So it's the emotional of, man, I made a bad choice. I should have done that. Or everyone's saying the market's going down, I should sell and get out. And that's a really, I think one of the areas that we as financial planners in our firm have done a phenomenal job, right? This is where we got to step in. We go back to the plan. Hey, have the goals changed? Because if you have a good plan and if you factored in, we're going to factor in there's going to be market pullbacks. We can't control those. Yep. So again, it's having that confidant, someone who can say, look, we've been here, we've planned for this. These are the things we're going to do. We're going to execute on this strategy.
And I would also add the emotional aspect. That is something that, it's something that's talked about, especially when times are good, where it's I know eventually we'll have pullbacks. And I know if you're talking to a do-it-yourselfer, I know that, the S&P fluctuates by X amount per year and I'm prepared. I would just, remind everybody that even though you can say that, when that stuff is actually going on, it's a lot different and a different part of your brain fires. I remember during COVID, the market drew down 35% in 6 weeks.
Yep.
And there were days that we would walk in and the price of oil was negative.
Yeah.
So there are situations where you say, hey, this
That's
can't
not
happen.
Normal. Yeah.
That's not normal. And it actually, it can.
Yeah.
And again, even though you can say that you're prepared and think that you know how you would react, when it's actually happening, a different part of your brain tends to take over, and it's just invaluable to have, somebody like us to help you through that.
Yeah, absolutely. And then, the other part of it is kind of the distribution planning, right? But I definitely think having that strategy, again, it goes back to from the time we start earning money and saving, we're taught to save. We're taught to, hey, put this money away, put up to 15%, your goal to get 15% in your 401k. There's no class out there or thought process regularly to say, hey, now you have to pay yourself, and here's how you're going to do it.
And here's how you take all those other moving pieces into play. Because you can Google, hey, how should I take money out? You'll probably see something that suggests the 4% rule and all of that, and that really puts everything in a vacuum and doesn't take all of these other things into account, much less what's going on in the market. So when we think about 401k plans or target date funds or some of these other pre-built portfolios, they're good at getting you there, getting you to retirement, but then ultimately when you decide, hey, now's the time for me to take a step back and I need to start withdrawing on that money, it's a completely different animal.
Yeah, and there's definitely drawbacks to that strategy that most people aren't aware of. And again, I think a great accumulation, as you said, but they have their challenges for sure. All right, so let's flip to what to look in a financial planner.
Yeah, these are things that we thought would be good to talk about, just commonalities that we've seen over the years. The first one is really in our opinion, the non-negotiables, the credentials. You want to work with somebody that's obviously licensed, they've been in the business preferably for a while. The credentials that we believe are the gold standard are the CFP, the Certified Financial Planner credential. That essentially, as we alluded to before, takes that group of 300,000 advisors that may have all sorts of different approaches, and it really casts that into a smaller net of 100,000 advisors. That is the first step in our opinion.
Yeah, absolutely. And then I think the next one is really how they get paid, right? How is there a clear defined compensation strategy? If you're doing just a financial plan, is it hourly? If you are an investment client with financial planning, how does that structure work? And this can be across the board. This can be all very different. Typically, if you're going to be with a CFP and a fiduciary, it's going to be in some type of advisory, either hourly fee to that kind of structure.
Right, and it has to be obviously transparent, agreed upon beforehand. In some situations, hourly may make sense. In some situations where somebody says, hey, I really value the relationship in advisory, in a relationship or fee basis, that makes sense. Commission, that has really, tended to really go by the wayside.
Yeah, and absolutely. And to your point about the compensation agreement is there should be an agreement, right? There should be something that outlines what you are expected as the client to provide and what your expectation, the expectation is for your interaction with the advisor, and vice versa, what the advisor is going to deliver, what, how long that timeline could potentially be, and then basically lays out what they're going to deliver.
And I would just add also, things have changed over time where our business did operate on commission for a long time. Now it's tended to transfer over to operating on a fee basis, which is a good thing. But there still are companies out there that are really good at marketing, that market things that, seem to be free where costs are nothing.
Right. Yeah.
There is not, obviously, as everybody knows, there is no free lunch out there, whether somebody's getting paid through assets under management, commission, sub-accounting fees through the investments that are used. There are no free lunches out there. So I would just emphasize that too.
Yeah, absolutely. And that leads into, make sure you find the right personality fit and, make sure that's compatible with your personality, what you're looking for in that advisor. Because we're all different personalities. We're not everybody's cup of tea, but make sure you find the right person who aligns with their values, also the strategy they've outlined and how they work with clients, which these should all be things you should be able to find either in their website, in the conversation while you're interviewing advisors also.
And it's so important because, you want to make sure that you're obviously, you like working with that person, you trust that person, but then when things happen in the market or your plans change, you just need to have full faith that they are the right person, for you and to guide you and your family. I would also say that there is no right or wrong answer with this component either. Just because an advisor has a lot of awards and accolades and all that does not mean that they're the right fit for you, and vice versa. We just think that is so important.
Yeah, absolutely. We spend a lot of time making sure that we line up clients and the advisor based on personality, and they're very compatible.
Yep.
So the last thing we'll talk about is also succession plan. If you've done all this due diligence, you find the advisor. Do they have a succession plan? Because if you go through, they're now managing your assets. Maybe they're 60, maybe they're 65. How much longer do they plan on working? And who would step in if something happens? Firm like ours at VLP, we are multi-generational. The founder, he's obviously been slowing down a little bit. Then we have the next, we have advisors almost at every level. We'll have one next week in the 50s. But again, and then the next younger generation, like we have a plan laid out. So, because that's important. When you find a group and company that you're comfortable with and you're working and everything aligns, what happens if they get hit by that proverbial bus? Who can step in? Who's going to be able there to provide the support and do and make sure that you're still on track? Right.
And the scenario that I always talk about with prospective clients is more often than not they're coming to us right on the cusp of that change, retiring. They're likely in their early to mid 60s, and they're going through that transition in life. I know there's a lot of different things that relate to the things that we covered, but I think that we did a good job of just talking about the things that are top of mind for us and some of the commonalities we see.
Yeah, absolutely. And I think again, as you're looking at why you want to hire an advisor and who and what what things you should be looking for, I think it's a great time to just kind of go through these points we brought up and make sure that you find the best fit for you. There's lots of great advisors out there. And again, when it comes to the financial planning, we really stress that the CFP is a great route to go.
Great. Well, thank you, Russ. Appreciate it. And as always, we ask the listeners, if you enjoyed this or enjoy any of our content, please feel free to pass our information on to family and friends. And we'll talk to you soon. Thank you.
Okay, thanks.
Thank you for listening to this episode of the Live Great Review. If you like what you heard, please subscribe to our podcast on iTunes or Spotify and recommend our podcast to family and friends. To learn more about VLP Financial Advisors, please check out our website at vlpfa.com. Thanks again.
And now for our necessary disclosures. Securities and advisor services offered through Cetera Advisor Networks, LLC, member FINRA SIPC, a broker-dealer and registered investment advisor. All investing involves risk, including the possible loss of principal. There is no assurance that any investment strategy will be successful. The views stated in this podcast are not necessarily the opinion of Cetera Advisor Networks, LLC, and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned. Due to the volatility with the markets mentioned, opinions are subject to change without notice. Information is based on sources believed to be reliable. However, their accuracy or completeness cannot be guaranteed. Past performance does not guarantee future results.